Hello and welcome to the Weekly Outlook at XM.com. I'm Maria Pachordes, and joining me is lead investment analyst Rafi Boyajian. We'll be reviewing the week ahead. So Rafi, let's begin with the May non-farm payrolls report due out in the US on Friday. Back in April, we had a disappointing NFP report with an increase of only 266,000 jobs instead of the nearly 1 million expected. What are analysts forecasting for May, and how might this data affect yields in the dollar?
Well, Maria, there's certainly a lot of focus on the May jobs report after that shock number we saw back in April. So on the whole, we should definitely see a much stronger number. The question is how strong. Now the latest forecasts are for a gain of around 600,000. But first, let's remind ourselves why the April NFP was so bad. There were a lot of seasonal factors which affected that figure, but a lot of analysts blamed that low print down to the generous unemployment insurance that was approved in Biden's last stimulus package. And so that was deterring people from going out and seeking work. And since then, though, several states across America have ended that extra unemployment benefit. So that should boost the May number as more people go out to find work. However, some surveys do suggest that employers were still struggling in May to fill their vacancies, so there are still downside risks to the number. But if we have a look at the weekly jobless claims, that's been trending lower throughout May, and so that does support the view that we should see a big rebound in May. Now, as far as the markets are concerned, so if the numbers are more or less in line with expectations, we're probably not going to see a huge reaction because that won't impact the Fed's narrative that what we're seeing with inflation is temporary and they want to see further progress in the recovery of the labor market. However, if we do see a much stronger than expected non-farm payrolls increase, that could definitely lift treasury yields. We're already seeing a bit of rebound there, and that would definitely help the dollar move further away from those 4.5 months lows that we saw recently.
Right. Moving over to Australia now, we'll get a barrage of data next week, but will any of that matter when we also have an RBA meeting, a policy meeting? What's the Aussie likely to react to more?
So definitely a lot of data coming out of Australia next week. Wednesday's GDP report will be the highlight, but all of these data are now pretty much seen as backward looking, so they won't tell us much about what to expect. But we do know that Australia's recovery is doing pretty well. So whether or not we see some disappointment, some positive surprises, it's not going to have a huge impact mainly because the RBA has made it pretty clear what it's looking for. Now, we do have the RBA policy meeting on Tuesday. They're expected to keep policy unchanged. They're definitely not expected to follow in the RBNZ's footsteps and signal tapering because the RBA, they want to see wage growth rise to 3% sustainably, and then that would then help inflation rise within their 2 to 3% target band. Until then, the RBA will probably stay very dovish. And the next the focus now for as far as the RBA is concerned is the July policy meeting, because policymakers have signaled that that is when they will decide whether or not to extend their QE program. So until July, we're probably not going to see much change in the Australian dollar. It will probably continue consolidating. And in the meantime, as pressure builds on the RBA to reduce its QE, because as the recovery improves, they do have some support for maintaining such policy, because we did see the state of Victoria being placed back under lockdown. So still a bit of uncertainty on the whole, though. The picture for Australia is positive, and all eyes are on that July policy meeting.
Okay, looking at Canada, first quarter GDP numbers are due on Tuesday, and the May employment report will be out on Friday. Over the past few weeks, Canada's vaccination pace has sped up, which bodes well for the recovery of the labor market. Are we likely to see a boost in the loonie?
So the loonie has definitely been powering ahead after that taper decision by the Bank of Canada. Now the rally has eased lately due to the dollar steadying, but we could see a bit of a boost coming from that GDP and employment data next week. Now there have been some regional lockdowns in Canada that could impact both the GDP numbers and Friday's jobs numbers. But given that we saw such a bad figure back in April when we had most of those lockdowns in Canada and we saw a big job loss for the month of April, we should see stronger numbers for May. And if there are positive surprises there, definitely we could see the Canadian dollar climbing above those recent 6-year highs that it touched against the US dollar.
And finally, in Europe, we'll get Eurozone flash CPIs on Tuesday. We could see inflation hitting or coming close to the ECB target. What kind of implications would this have, if any, on ECB policy in the euro?
So the forecasts are for the headline number to be 1.9% year on year for May. And so that's pretty much hitting the target, because the ECB has a target of close to about below 2% for inflation. Now, on the one hand, this is a good thing because the Eurozone inflation has undershot for so many years now, and finally they're hitting their target. But the problem is it's expected to rise even further in the coming months. We should see much higher inflation. The ECB has said, like the Fed, that this will be temporary. They're not going to react to it. But nevertheless, there is speculation building up that the ECB could soon announce that they will slow down their asset purchases. Now, we had several policymakers downplaying this prospect, so we probably shouldn't expect much at the June policy meeting, but nevertheless, that's where much of the attention is now. It's a bit of a wait and see what the ECB, or how dovish the ECB is going to be in June. They don't want to get too carried away by saying the recovery is doing well, and that could weigh on the euro. On the whole, the euro has been doing rather well despite those recent dovish remarks. It hasn't fallen that much, so investors remain optimistic. But basically, we have to see just what the ECB is going to say in June. How dovish are they going to be? Are there going to be any signals there about tapering? But until then, we could yet see the euro rising because of that growing optimism about the Eurozone economy.
Rafi, thanks so much. And thanks for joining us at XM.com.